I'm here with Sallie Krawcheck, who needs no introduction, but I'm going to say a few words about her anyway. She's a Wall Street trailblazer. She's held leadership roles at Merrill Lynch, Smith Barney, and Citi, including CEO of Citi Private Wealth. She was once named the last honest analyst by Fortune magazine. And for the past few years, she's been running Ellevest, a financial services, investing, and wealth management firm that she founded to cater to women. So thank you so much for being here with us today, Sallie.
Amanda, thanks for having me.
And we don't have a ton of time, so I'd like to just dive right in. Ellevest did its own survey on the great wealth transfer and what it means to women. So I'd love for you to walk us through some of the key takeaways and some of the most interesting findings from that.
So for those of you who are not familiar with Ellevest, Ellevest is an investing and wealth management company funded by, founded by, built for investing through women, with a mission to get more money in the hands of women, and with a very strong point of view that nothing bad happens when women have more money. And that the gender wealth gap, we talk so much about the gender pay gap, the 80 cents to a white man's dollar that women earn, but there's a gender wealth gap which is 30 cents to a white man's dollar and has been a penny for black women and has been going backwards. So Ellevest was founded to close the gender investing gap, to help women build wealth through investing. Most women do not invest nearly as much as men do, and so really lose out on investing over the course of a lifetime. That's the bad, and there's a lot more bad news, but that's sort of the bad news. The good news is this great generational wealth transfer that's going to happen, and where that money is going to end up. We tend to think about it and we talk about it as money going to young people, which is amazing. But do you know where it goes first? To her. That he goes first, and we're sorry to see him go. And he's starting to go because the male boomers are starting to hit 79, 80 this year. He passes away. The money goes to her. Did you know that 80% of women die single? Did you know that 90% of women manage their money on their own at some point in their lives, whether they want to or not? And so that money goes to her first. And that, that big wash of money that's going to go, it's going to do the work. Women's longevity is going to do the work that Sheryl Sandberg's Lean In did not, which is to get the majority of wealth in this country into the hands of women. Our industry, I don't think, is ready for it. I mean, we're ready for it. Because what happens in the year after her husband's death is she typically leaves their joint financial advisor. By some counts, as many as 70 to 90% of women leave their joint financial advisor in the year after their husband's death. And today, that money typically goes into the bank. The good news is she does gain financial confidence when she gets that money. The bad news is once she's sort of taken it out, only about 30% of women know where to go. So this is a massive opportunity. And if I'm looking around this group, this morning, this very attractive group of people in this room, I'm going to say it's 70 to 80% men. Our industry is lopsided and is not prepared for women stepping into the wealth that's coming their way.
Right. And I want to just talk briefly about the relationship between women's financial confidence and what happens when they get a windfall.
Yeah. So we all know, right, there's this financial confidence gap that women have. I mean, that goes along with what we all know, which is that women are risk averse. We all know that. Women need more financial education. We all know that. Women aren't as good at math as men are. We know that. Women don't want to do the investing. We know that. Literally none of those things are true. But we believe, feel free, but we state them so often, and our evidence for the fact that those are true are, oh, look, she's not engaging as much as he is in investing. She's not the primary client in so many ways. Therefore, we sort of intuitively say it's her fault, and she needs more financial education in order to participate. Ellevest, what we said is maybe, but maybe she's not risk averse, maybe she's risk aware, and maybe we'll build a company that really centers her. And it may not be as much about crypto trading, for example, or even trading, for example, and might be much more about goals-based investing, might be much more about investing for impact, which I know a lot of men have turned away from, but a lot of women are still really interested in. So back to the women don't have financial confidence. Well, we tend to think they're not confident so they don't have money. What the Ellevest research has shown on the great wealth transfer is they don't have money, so they're not confident. Once they get a windfall, that confidence grows. In fact, it grows so much, our research shows, that she becomes more confident than, wait for it, men. And that it's the very act of having the money that she grows. She also, doesn't like to talk about money because she's been taught, and been shamed that she's not good with it, and the evidence is you don't have enough. But once she steps into a windfall, she's much more willing to talk about it with her family and make it part of the family flow.
Right. So we've talked about, the first people to inherit this great wealth transfer will be the wives and then the children. Mm-hmm. Can you talk us through a little bit about the different financial needs that those two groups face and how they should be approached as clients by firms like yours?
Yes, so at Ellevest, we talk about, yes, the great wealth transfer, but we talk about the end state, which is the feminization of wealth. And it's a pretty great place because women tend to use and invest their money differently than men do. Women tend to invest more for impact, are interested in investing for impact, interested in learning about investing for impact. Women are more likely to give away a larger percent of the wealth. They tend to be more philanthropic. Women tend to believe more in the negative effects of climate change, which we're seeing today in action, and are more likely to give money towards affecting positive climate change. Women are more likely to invest that money in their family, and the women are more likely to invest it in their community. And so you can see this starting to happen with a number of these terrific women who've inherited money and are using it differently. You can see what a Mackenzie Bezos is doing, for example, using her money. Jeff is, going to space in a rocket, and she is a suggestively shaped rocket, as a matter of fact, and she is giving that money away, and giving it away as quickly as she can. Melinda Gates, who's an investor in Ellevest, has recently come into some more money and has been investing it very quickly in other women. Even Dr. Gottesman here in New York inherited $1 billion and gave that money away so that young people would not have to pay for medical school. And so you see this sort of softness that occurs, this philanthropic urge that occurs, where women are looking to and are using their money differently and therefore are looking for advice in order to, how do I invest for impact? They find it hard to find at the traditional companies. And we hear again and again as women become clients of Ellevest, I had to sort of drag my company into impact investing. I had to drag them into alternatives, and the alternatives that were available were more hedge funds and private equity as opposed to workforce housing and, investing in startups run by women. So the needs are just fundamentally different, we see, for women. And much of that, can hold for the next generation, particularly the next generation women feel the responsibility of the money and the wealth they have and are looking to have, what is that positive impact that we can have? They feel that, if not, as in many cases, more than their mothers do.
Right. And so, this is Bloomberg Invest. We obviously like to talk about investing here. I thought the point you made about women being less risk averse, the conventional wisdom around women being less risk averse is not true. And, maybe that's because, they may not like crypto or, maybe they don't want to, throw their money at, suggestively shaped rockets, let's say. So what are some of the asset classes they do like to invest in that might be, surprising to some people?
So first of all, one thing I will say is that the gender difference we do see is around understanding the investment. And so that not risk averse, but risk aware, what that means is I want to understand the risk that I'm taking and what kind of risk is it and how much can I lose and how bad can it get. My friend Reshma Sojani says something that I think really explains it, which is from youth, boys are taught to be brave and girls are taught to be perfect. And so boys are taught to go ahead and take a risk if you don't fully understand it. If any of you have daughters, They're all working to get straight A's at school. I have a son and a daughter. My son used to come home. My daughter would come home, crying. I got a C at school. I'm so upset. I should have done better. My son would come in and he'd be like, I got a C. I'm like, what? And he's like, yeah, I didn't study that hard. Imagine what I would have done if I'd actually studied. And just that difference between the two of them, I think, holds into adulthood, where I found when I was running Merrill and Smith Barney, we find it at Ellevest, that men will invest through jargon that they don't understand, to sort of contextualize it. And women tend to say, wait a second, you know what, I got to back up and I got to figure this out and I got to understand it. And so the more complex an investment, the longer that will take her to get comfortable with. But in general, our research shows she doesn't love trading for the fact of trading. Some women do, but as a rule, she's much more goals-based in her investing. And so investing for her is not even about making more money. It's, can I buy that home that I want to buy? Can I, leave that philanthropic gift that I want to give? Can I do this for my family? And so it's much more conceptual as opposed to I want to make money. And then, as mentioned, the impact. So women are multitaskers and women are demanding. We all know that. And so she demands those market-type returns, and she wants an impact. And so what we've built at Ellevest, I think, is the most eclectic offering of impact-based alternatives, where it's, again, not hedge funds and PE, but investing in workforce housing, fixed up sustainably, rented to women who are victims of domestic abuse in transition, or investing in venture capital funds that invest in women-run companies, or investing in water equity, or investing in femtech. Those kind of things where there's a richness to the investment and a positive impact to the investment, as well as the opportunity to earn market returns.
Right, so that double bottom line effect that you hear about.
That's right, double or triple.
Right. Mm-hmm. Just want to take a quick moment to remind folks, there is a QR code that you can scan if you would like to ask a question. We'll see them here on the monitor in front of us, so please feel free to do so. In the meantime, I wanted to ask you about the fact that, as you've said, this great wealth transfer and having the majority of the money come into the hands of women has the potential to reshape society. What does that look like?
Kinder, I hope. I think politics. Who here is super happy with the politics of our country right now? Like, everybody's like, this is as good as it gets. Amazing. Really happy with the choices. Well, if women have more money, they will give more money to politicians whose values align with their own. We might not agree with every politician, but it's not too hard to see that they'll give money to folks who, I don't know, might enable this country to stop being the only developed country without mandated paid parental leave, which, by the way, pays for itself within a year. So women today have 30 cents of wealth to a white man's dollar and give about 30 cents of political donations to a white man's dollar. So I think everywhere you look, again, societies are fairer, communities are stronger, they invest more in their kids. I think we could just see a softening that could occur and sort of a kindness that occur once women have more money and feel fully empowered to step into that money.
Right. And what are some of the both challenges and most interesting lessons that you've learned in working with this population?
Challenges, women are tough customers. They tend to trust an advisor more slowly, tend to do more homework, tend to move money over more slowly, tend to just have a high standard. Some of that comes from, again, girls are taught to be perfect, and they really expect that from the other side. They can see through the women's initiative that doesn't have any substance to it a mile away, and in fact is completely sick of them. If you're thinking about, now that Sallie's doing this conversation, let's have an event and we have a woman financial advisor and let's have her at it. And then women like Chardonnay, don't they? And then we could sort of bring in someone to talk about stocks, and maybe we'll do a newsletter too. that'll talk about, women things. And then they go to your website and there's nobody who reflects them there whatsoever. And so they can see through that and, can see through what is a marketing campaign as opposed to a real drive to solve their problems. I love to say about Ellevest that we were really the first not to market at women, but to serve women. And that comes from having a company, whereas the industry today is 85% men. And, by the way, I love men. I've been married to a couple of them. And I think they're amazing creatures. But, our company is 85% women. Our company is close to half people of color. And so from the very first, we represent her, we are her. We have an all-woman financial planning team. We have an all-women financial advisor team. Not that we won't have men on at some point, but, in the first instance, reflecting her. Our chief investment officer is a woman. We're investing for everybody. So since we are her, the her who went to business school and the her who worked on Wall Street and investing for 25 or 30 years, there's an authenticity there. So if you're engaging with women, they tend to see that lack of authenticity a mile away, which means that doing this is not as simple as, boy, that's interesting, let me do a newsletter, but how do we, shift our company and our offering to reflect her?
Right. We did have a great question from the audience. I know we're over time, but I'd love to quickly address it because it is such a good question. How do we encourage more women to become financial advisors, since there's too few of us in the industry still?
Yeah, no, there are too few of us. I would say hire them. Go out, look for them, and hire them. And then don't be short-sighted about if they don't make that first cutoff, in the first quarter. Recognizing that because a client they may be engaging with, women tend to take a little bit of more time, tend to be a little bit more considered in their movement, that they won't have that, immediate pop to business. And so it's really an investment that a company needs to make, and look, that's why I built Ellevest from scratch.